Okay, is this making sense so far? Yes. We certainly want to be resourceful. Some of that should get you thinking, going, my God, what else can I achieve? Have I been holding myself back? Have I been using excuses? I don't have the money, or I don't have the time, or, you know, it's people that achieve, no matter what level, it's Richard Branson or it's Rupert Murdoch or people that outperform financially, they've had to be incredibly resourceful and solve problems. Warren Buffett, you know, they don't panic, they just see what happens. And that's biggest key no matter what you do. Same with the US. If you want to do really big things with the US, just it's being more resourceful, doing what's required. Okay, and it's a good example of that. So what we're looking at here is, most of you would know this from the DVDs. We look at predominantly the strategy has been the most common way most 21st century members have made the most money is they've done what I've taught them to do, is buy Australian real estate, buy and hold. Okay, there's many different strategies we teach in the home study, but buy and hold is the principal one. And over time, has that worked well in Australia? Yes. Yep. And then the other thing to cash flow that is the concept of share renting or other cash flow type strategies where you can draw out some line of credit if you wish and generate some cash flow, where most people buy shares for capital growth. We say, well, if we can get that from here with a lot more certainty, a lot more ease, then let's generate cash flow from over here. Make sense? And a lot of people have done well some share renting, or whether it's share lord, or then they can go a little bit more advanced and do some selling insurance, like with what John Thompson's done, been very successful at, our 21st century member from Perth who's making $40,000, $50,000 a month, you know, and he started off 4 years ago. So they can generate different cash flow strategies, or then you can go even further where you don't need a lot of money, which some of you might be trading with e-minis or with Forex, etc., where you don't need much money, but you need a lot more skill, a lot more training, okay? But generally, share renting and buy and hold real estate, people are just stuck to that, have done quite well. Just keep it simple, away they go. However, what I did an update recently in the last few weeks. Some of you may not have seen it yet. But basically what I said, there's a small shift in the strategy. And the shift is coming mainly because the changes in the dynamics in the world and changes in the different property markets. I basically went out and told people that I'm no longer as confident or as bullish on the Australian real estate. I don't see myself buying a lot more Australian real estate. I'm liquidating some of my Australian real estate. It doesn't mean I believe it's going to crash. I'm not someone saying Australian real estate will crash. I'm saying that my belief is this: I don't think you're going to see the returns in the future that we've seen in the past. Who'd be willing to probably agree with that, okay? Now, obviously, that's talking Australia in a whole. Doesn't mean there's not different cities and regional areas in Australia that are going to outperform. There's always certain suburbs, and there's always ways to get property undervalued, and there's always ways to renovate and add value to property. So there's still profit potential, but just a typical buy and hold, to think that we're going to get as much growth in the future as we have in the last 10, 20, 30 years, which has been very successful for people, is probably a little bit over-optimistic. Some people say there's a crash coming in Australian house prices. I'm not suggesting that. I think there will be a pullback in some areas. I'm not saying, you know, I remember a few years ago going on radio when there was the naysayers coming out in the credit crisis saying Australian real estate is going to crash 40%. I went on radio saying, I don't believe that's going to happen. I don't see any fundamental reason that should happen, because at the time, remember, the US was crashing and the UK was crashing. They're like, Australia's going to, same thing's going to happen. And I said, no, I don't believe it's going to happen. I said, here's my bet. I bet it will increase 20% and grow another 20% before it ever crashes. And what happened since then, because remember in the credit crisis, no one was willing to bet hardly that Australian property was going to grow 20%. But guess what happened? Melbourne, 18% the next year. Okay? So, and a lot of other cities, even Sydney, started to grow again. And a lot of cities did quite well. You know, Perth and Brisbane didn't do so well. But the point was that it still grew. Why? Because I was following fundamentals. I wasn't worried about what the doomsday people are saying. The fundamentals were, in Australia at the time was, did we have record immigration? Yes or no? Yes. So if we have a growing population, will that cause property prices to crash or grow? Most likely grow, or worst case, put a floor under the prices, because it keeps pushing up. So we had record immigration and a lot. So that was another thing. Also, I realized in the last recession, someone would say it's a recession, we're going in recession, that will cause property prices to crash. Well, once again, check out the facts. The previous recession we had in Australia, if you remember, the recession we had to have, our friend Mr. Keating, okay, is still just as popular today in Sydney. And so in 1991, we had a recession. That was the last recession. We had like 17, 18 years of uninterrupted economic growth. But property prices didn't crash in 1991. You know, despite a recession, despite rising unemployment and rising interest rates. So if you study history, you go, well, it doesn't necessarily mean they'll crash. So I was confident at that time that wouldn't, because all the fundamentals, there's some other fundamentals that was driving the Australian real estate. But now I'd say, this is now with 2011, I look at the Australian real estate, it has grown in many areas up to 20% in the last few years. Then we go, well, you know, what's the future going to hold? The future's most likely going to see slow growth or some pullback, okay? It doesn't mean that if you've never bought Australian property for tax advantages, I still think negative gearing is a great tax scheme that's legal, so take advantage of it. Okay, who's got at least 1 or 2 negative geared properties? Many of you. So if you haven't got properties, it's still a worthwhile bet for that. But for rampant capital growth, I'm going, I'm not going to see massive growth in Australian real estate in most areas. There's regional mining towns, exceptions. Okay? Certain suburbs, exceptions. If you can get something distressed, yeah, you can still make money. But overall, not as bullish. Then you're going to say, where else would you invest? Where else can you look at it? Well, there's 2 areas that I've been looking at, and that's why I share it now as a strategy. One is obviously the US. We're in the US. The US, where you have an opportunity to go back and buy property that was $300,000 or $250,000 for $100,000 or less. Okay. Many of the properties you'll be able to look at this week range anywhere from $34,000 up to probably $100,000. Okay, you can go into markets and pay the $200,000 type markets. There's those markets in the US as well. Okay, or you can go and you can't go much cheaper, but you're getting $34,000. That sort of price range is fairly cheap, would you say? And in that sort of range. So you can go back into a market where you can look at that, and we're going to look at what's the capital growth potential. Okay. The other area that I invest in is land. Some of you, I've told you about that as well. Land in Australia, land appreciates much faster than actual properties. Houses tend to depreciate. It's the land component that appreciates. Most of you would understand that. Is that true with property? So if you can, but the downside of land for most people is hard to get finance, you have got no income. Okay. So it's bleeding you, but if you can do things that we've been teaching some of our members where you don't have to settle for extended periods of time, then you can get the capital growth without any money coming out of your pocket, and you don't need finance. Okay, so some of those are more sophisticated type strategies, hard to do for the average person, but you're able to adjust strategies to make them more effective. So when I can do those things, I can make more potential growth on that than I can saying, well, just buying whole Australian real estate's not that exciting. Who's following what I'm saying here? Obviously, you're looking at those same markets. So the US, we're going to say, well, obviously the US, we're looking at the US for 2 reasons. Okay? One reason is for what? Capital growth. The other reason is cash flow. Who's more after, and you're probably obviously after both, but who's more after cash flow? Yep. And that's very attractive for that. So if you have Australian real estate that's negative geared or not be growing as much, you can supplement your portfolio with the US. So you can diversify, get higher cash flow. Some people will use the US properties to help fund the shortfall in the Australian properties. Okay? Or you just use the cash flow however you want. Some of you go, I don't want to touch any more Australian properties. If there's bargains in the US and I'm comfortable with it, I'm going to do that. Some of you in that, I'm happy to do that as well. So that's where you're looking at. So capital growth and cash flow. Now, we talked about earlier this morning, you can focus just on cash flow areas and just go for cash flow in certain cities, but you won't get the capital growth or very minimal capital growth. But you'll get higher rentals. Okay? You get higher rentals in Phoenix. You can get areas in the US with higher rentals, but flat capital growth. Or you can go and do things I wouldn't recommend, where you can get really high rentals, but you're going to get negative potential capital growth, which defeats the purpose. Making sense? When we're looking at a city, say Phoenix, what we're looking at is a bounce back strategy. So potential capital growth and cash flow. Making sense? Who's following what I'm saying here? So that's what you're looking at if you want to do both. That's what I think is a good strategy, and that's what we'll be looking at. Okay? So, and now some people say, investing is risky, which is true, and they'll go, well, the US, it's risky. Now, obviously, to the uneducated investor, there's quite substantial risks. I'm going to go through what those risks and how we minimize them. But here's what I look at. Whether you're bullish on the US, or just some people say, Jamie, what's going to happen with the US economy? What if it tanks? And we'll talk about those things as well, how that will affect your potential future of your property. But my bottom line is this. This is the way that you set yourself up for the most likely chance to succeed. My bets on the US property is based on this. I'm willing to invest in US property on the basis that if I get no capital growth, I can live with it. Does that make sense? And you're saying, Jamie, but I want capital growth. I'm not saying you don't want it. Of course we want it. But I'm willing to invest and say, you know, I'm setting myself up with the highest chance of succeeding, okay? And having realistic expectations. So if I get no capital growth, but I'm getting good cash flow, my worst case scenario is, as long as I bought in a good suburb and a good area where there's plenty of paying tenants, and the property's a decent property, decent value, and I'm getting good rental returns, my worst case scenario then is that it will pay itself off over X amount of years, and I'll have a cash flow paid off property, okay? Or if you're paying cash up front for your property or using your super money, then it's all free cash flow because you've got no debt on the property. Making sense? So who thinks that would be smart to come from that perspective? I'm not saying we don't want capital growth. I don't want you going, oh, yeah, but I want capital growth too. Yes, we want that, and we're going to plan to hopefully get that as well. But if we know our worst case scenario is the cash flow is going to make it pay off our investment, then we go, okay, I can live with that. Because why? Does anyone in this room know for sure what's going to happen with the US and world economy a year from now, 2 years from now, 5 years from now? I mean, if someone 5 years ago said this was all what's going to happen up until now, no one would have believed you. So we don't know that, okay? I can give you my opinion on what I think will happen, but then we don't know, and that we'll adjust our strategy as time goes, okay? Would you like to know what I think might happen in the next 2 or 3 years? Okay. We might save that for tomorrow, okay? Because I'm already half an hour into the next speaker's time. Okay, but remind me to cover that tomorrow. Okay, let you get your head around this, etc. But I'll give you what I believe fundamentally will happen, but we don't know. But that's why we're setting ourselves up so it's outside of our control. We are preparing ourselves for if we don't get capital growth. Now, of course, we already know if we're buying well below. In this article, you would have got the other article if you hadn't had a chance to read these articles later. But one of the things it actually says, which is fairly interesting. Not only is it good for the young people now, they can buy property, they can afford to buy it, is that some of these cities, it says, some cities are still falling, obviously at a slower rate. In some cities such as Atlanta, Cleveland, Las Vegas, Detroit, Phoenix, the property prices are at levels at or below what they were in 2000, so 11 years ago. So Phoenix is one of those cities where you can go into the market now and buy properties that are below what people were paying for them 11 years ago. Make sense? It's like winding back the clock. So that's pretty exciting. And some of the stuff you're going to see tomorrow with some of the examples of what's available, it'll blow your mind. And when you get out there and actually in the field and seeing stuff, and you see some of the properties are actually good quality properties. Okay, some aren't. You know, you're getting property for $50,000 or $45,000. They're not going to be mansions. You know what I'm saying? Okay, some of them are not, you know, flash, you would not live in them. But are you here to live in a US property, yes or no? Most you know. So remember when we look at, I remember being on a January tour and I went out in the bus with some of the members and they're going through some of the houses and a lot of people are looking, you know, for the microwave or looking in the kitchen where this was right. And I'm thinking, I thought it was cute, but for me, the only thing I'm interested in is what? The house. Well, I'm interested in the numbers, is that true? I bought a lot of properties in Australia that I've never seen yet. Okay? Never seen yet. I trust that they're there because the bank loaned me money on them. If they're not there, that's the bank's problem. Okay? I trust that they're there. But I'm not going to live in these houses, so do I need to see the property? Not necessarily. I need to have, you know, have a building inspector check that, you know, they're structurally sound. Of course, you'll do the basic stuff. I trust that they're there, okay? Because you're going to get the title and stuff. So, but the point is, I'm strictly focused on the numbers. Okay? So even when you're going and obviously you're here, you're going to be able to go through properties and see them as well. But remember, stick to the numbers, not the emotion. You're going to go, oh, well, I'd change this room because if I was going to live here, I just really don't. The curtains, I'm not really happy with that. And, you know, I don't want to change the, you know, the pool area just doesn't look good. So you don't want to get caught up in all that, okay? Because some of the places you would not want to live in. If you don't have a lot of money and want to buy a cheaper property, some aren't that exciting. They're not like, you wouldn't want to live there. Some places you'll see, not too bad, the ones you're seeing, but I know in January some of the places, it's like, you didn't even want to walk into some of the places. They just had that energy. It's like, you know. And some people live in that sort of stuff. I wouldn't go near it. But as an investor, okay, rental return sticking to the numbers, it's a different story. Remember, you're an investor. You're not intent, unless you intend moving to Phoenix. If you want to live in Phoenix and want a nice mansion, okay, there is mansions you can buy in Phoenix that are huge. I looked at one when I was here in January that was worth $3 to $4 million at the peak of the market. You can buy for $960,000, okay? And that was in January. Now you take an extra 10% off that because our dollar's gone up an extra 10% since January. So we're looking at $800 and something thousand. I tell you, if you saw this place, it's huge. And they have big houses here. Yeah, and a lot of wealthy people live in Phoenix. You realise Phoenix is, Robert Kiyosaki lives here in Scottsdale. Phoenix, a lot of very well-known people live in Phoenix at least part of the year. It's not like some place in the desert when you get out there and see that. Phoenix is a metropolis that has massive industry, massive employment, rampant growth. I mean, greater Phoenix area is 5.5 million people. It's a huge city, okay? A huge city in the greater area of all the areas that make up of Phoenix. It's predicted to grow to 8.8 million people by 2040 and become the third largest city in America. So the future potential, when you see just that, the population predictions, the economy, because when I first come here, I was like, what's the industry here in Phoenix? Why would people even be here? Is there any jobs? But when we go through the stats, we'll go through that tomorrow, and some of the other speakers will go over it a few times. But when you see the stats, the industry, the major corporations here, the amount of jobs that are here, you start to go, my God, this is different. This is not a Buffalo. This is not a Detroit. This is a growing city. So you get to, and what I'm saying, you can soon learn a lot about a city fairly rapidly. When you get out there, you start to get to know the suburbs. It'll become like you'll get to know this city more than you know some of the Australian cities. Okay, making sense? So you just by that awareness, you just get a natural inclination and understanding of what's going on rather than just guessing or hoping. Okay, making sense? Okay, so what we're going to do, in just a moment, bring up a next speaker, okay, on finance. Now, he's not a professional speaker, but he's going to share some different financing options. Now, the reality is in the US, financing is very difficult and it's changing continually. Okay? Obviously, you're starting your relationship with Wells Fargo to build up a credit history with Wells Fargo. So that's why you're saying, so you're building that up with them, a credit history. So in 2-3 years' time, you have the opportunity to finance with them because you have a history with them. That's why you're doing. That's why you open your bank account. You're keeping that going over that period of time. Obviously, you've got to have your rents go somewhere anyhow, and you'll see that's quite easy to control all from Australia, etc. And once you've opened up one account, to open up the rest, you do down the track, whatever, it's a piece of cake because you've got that relationship built. You can just do it from Australia. It's easy. Okay, so that's why we got you started off with that straight away. So that's building that up. So in the future, you can then get US funding. Now, obviously, we've been speaking to Wells Fargo, and they are open to the potential, no promises, but open to the potential of creating product for foreign investors, particularly Australians and Canadians, where they may consider, within less than 2 years, creating a product and financing Australians into the US property market. But they have to have enough volume to create products for that, okay? And they're starting to see that foreigners are a far safer bet than loaning money to Americans, okay? But that takes a while for banks to get their head around that because they go, Australia, that's a long way away. What if you don't pay your mortgages or whatever, okay? But the reality is Australians would be pretty safe bet, is that true? As I said to them, imagine if Australia already has an existing property. You may not be able to take security on it because they mightn't like that. But if you know someone in Australia has an existing property, they want to borrow in the US, they're used to full recourse loans in Australia, meaning that if you don't pay, the bank comes and takes the property and you'll be bankrupted effectively, true. Where in America, they have a lot of non-recourse loans. Okay, you just don't pay, you just walk away. Okay, that's one of the differences in the banking system. So we're used to, in Australia, you pay your debts. Is it true? Otherwise, you get bankrupt or you get a damaged credit rating. So, and we're also now, we're a wealthier country. Our dollar's worth more. It's a commodities boom. It's a growing economy, lots of jobs. We're a pretty safe bet. But you understand, from an American point of view, we're a small part of the overall picture. But if we're through volume and working in that relationship, there's a possibility there to shorten that time frame from 2 to 3 years, okay, which would be a major advantage. We can't promise anything, but we're continually working on that. And it's just about building a relationship. And we've got a good relationship with them so far. They've been impressed with Australians, okay, and they like you guys. So please be nice to Tim particularly, okay, on Saturday. Now, there's been different talks of different lending. So some of the lending changes. So in the past, some of our 21st century members have been able to get some hard money loans in the US, okay? And different various interest rates, okay? That varies. Sometimes that's available, sometimes it's not, okay? What we're now looking at sourcing other ways is also how do people get finance in Australia. Obviously, if you've got properties and get line of credits in Australia, you can do that automatically, or you can just use cash. Some of you aren't worried about finance. You just use your cash to buy a property, or you use your superannuation to buy it. But you might want to buy extra property. You might need leverage. So there's ways also in Australia to get short-term lending, okay, or bridging type loans, whether it's just sometimes for a couple of months while you're getting your line of credit set up, or whether it's for a couple of years, okay, why you might do short-term funding, which is generally referred to as hard money, okay, where you pay a higher interest rate for it, and then you refinance a lower interest rate in the US in 2 or 3 years' time once you build up your credit history. Making sense? Okay. So our next speaker is going to go through some of those options. Some of you, it's not for everyone, but it's just there as an option if you want to look at some different financing options. Okay. Who's interested in that? Yep, we'll go through some of that. Then what I'm going to do is they're going to have Warren come up and speak to you after that. He's going to go start introducing about the structures. Okay. Now I know some of you, it's like it can be complicated or it can be complex. It's like anything. Once you've seen it a few times, okay, it starts to make a lot more sense. Remember, you don't necessarily need to know all this. I'm going to teach it to you anyhow. But if you just want it set up, all these structures will be able to be set up for you pretty much most of them while you're here. Okay, so it can be done. And there's different specialists that are coming in, etc. They can do that for you. So if you're like me, sometimes look, just do it. Okay. Just get it done for me, whatever has to be done. You can be like that, but our duty is to educate you through it all. You don't have to be a professional accountant on US and Australian tax law. You're not expected to have to do that, but at least have a basic understanding. Fair enough? So you're going to go through that. So all I challenge you to do is keep yourself wide awake. It's important to learn those things and just take as many notes, and then you have plenty of times throughout the weekend to ask your questions, and you say, as the days go on, and a lot of times the speaker's referring back to things, it'll start to all make more sense. So if you get a little bit overwhelmed or confused, jot that down, jot this down. Confusion is good. Confusion means you're about to have a what? A breakthrough. Because on the other side of confusion is aha, I got it. Okay? A lot of people get frustrated, like I'm confused, it's like it's too hard, and their brain links pain, I'm just going to go back to what I've been normally doing. Okay? And sometimes this week you'll feel like this going, you'll be like, Christ, I just thought US property was going to be simple. Just come and buy a property, go home and enjoy America. It's just, sometimes you're going to be like, my God, this is so much to know and it's overwhelming. It's like, maybe this is more difficult than I thought. You'll go through that process. When you get through it, it's like, actually, no, it's not actually that hard. It seems it, but it can be fairly simple. There's things that you need to know, but it's like anything. If I had to come in tomorrow and work in your career, and I've never done what you do for a career, the beginning would be fairly difficult. Is that true? And you'll be like, oh, it's a piece of cake. I know what I'm doing. But it's because you've done it over and over again. You know how to tie a shoelace. But remember the first time? How complex that felt? You probably can't remember, can you? Okay, but trust me, it was difficult. You'd be like, you mean I have to do this for every day for the rest of my life? There's no way. I'm wearing sandals, okay? But it become automatic, and so it's like anything. Just give yourself that time. You don't have to become an expert overnight. It's like anything. With other things you've been learning, it starts to make more sense. If it doesn't, some things, remember, do I really need to know this? Well, no, someone will just do it for me, okay? Very good. So quickly turn. Does anyone have any questions? Yeah, we'll take a couple of questions, and then we're going to bring up Goro to share with you about some finance options. Yeah, we'll just take a quick question here on the microphone.
Missed your point there, Jamie. You were saying that before you had the 3 options, but now you changed the plan slightly.
Okay, so with the synergy, this is what I call the financial blueprint. So what I've changed is this. What I talked about is that before with Australian real estate, the strategy was predominantly buy and hold Australian real estate. You might cash flow it with share renting. Also, what I do, I build other forms of income, internet incomes or businesses, etc. So I have the whole 3 working for me. And then in each of these areas, there's multiple strategies you can do. You can buy off the plan, you can renovate, you can buy and flip properties, etc. Different, a dozen different share strategies you're taught. So you can do a combination of things. The shift is this, saying long term, I'm no longer as bullish that Australian property is going to grow at the rates it has in the past. So for me, I'm not planning at this point in time buying many more Australian properties. One, I've got to pay high prices. I've got to pay stamp duty. Okay, it's the stamp duty you pay on some properties. I just had to settle on a property, just a small property, 2 days ago. And there's another check for stamp duty. It's like, that's dead money you never get back. Okay? In America, do you have to pay stamp duty, yes or no? No. Who's excited by that? Okay? So, you know, in Australia, it's killing our property market. Okay? So you have to pay that. You have to get finance. You're buying at a very high price. Okay? Doesn't mean it mightn't be worth more in the future, but you're buying a high price. Therefore, I'm going, you know what? If I can do land deals which grow faster than houses, and I don't have to pay for them for a decade or so I don't even have to get the finance, I don't even have to, I'm going to do that all day long. Do you know what I'm saying? Because more growth. If I can then come to the US, and if you want cash flow property, you can invest in the US and potential capital growth because you can get it at a down market. I'll talk about tomorrow morning about Forex and the Australian currency. Do you realise you're getting a double dip right now? Our dollar's gone up rapidly. I'll talk about what my future predictions are of that and how that's going to adjust. Because who's doing Forex? Who's already a Forex trader? Okay, a couple of people. Jot this down. You are all Forex traders. Just some of you have done a Forex trading course. The rest of you haven't. You are all now Forex traders. You realise that? Yep. You say, well, Jamie, you haven't bought a property yet. Am I still a Forex trader? Yes, you're in America. You're converting your currency. You're trading the US dollar right now. True? And it's a good trade for you. I'll explain what I mean by being a Forex trade, but some of you will do the 21st Century Forex course to trade Forex. This is another way to trade Forex. By buying property is going to be a Forex trade for you. And I'll talk to you tomorrow, like you're getting like a rock bottom prices in the US and sky high dollar. That is a double dip. I'm going to show you tomorrow how if the US real estate doesn't grow 1 cent, how it's possible for you to make a lot of money. Would you like to know how to do that? Yes. Okay. When you go through that tomorrow morning, remind me, okay, in case I'm by the pool or sleeping in. So, does that answer your question? So what I'm saying is I'm not as bullish here, so I'm substituting that with land, okay, which some of you would know about, some of that land strategy. If you don't, just email the office. And US property, we're adding to that as well. That's what we're doing. So this is a slight shift. So here's what I want you to do. Turn to the person next to you. Teach them why you're a Forex trader. And then we'll have our next presenter up in 2 minutes.